Hey traders, hopefully you're having a good weekend so far. We'll be jumping into quite a few different charts, but just want to quickly speak on how the overall market is looking. As of right now, it does look pretty bullish for crypto. Things like Ethereum have broken out of their major descending wedge that they've been creating, as well as many other altcoins that have been showing a similar sort of structure. Some of the altcoins have shown relative strength by either holding a key zone, for example, Cardano's dollar zone, and some altcoins have even made higher lows. For example, Solana has made higher lows, indicating that there is relative strength or buyers are flowing their capital into those particular altcoins, and we can see that because they're creating higher lows. Buyers are stepping in earlier and earlier compared to things like DOT or for even example Pancake, which has not been holding compared to things like Solana or QNT. So we'll definitely talk more into the altcoins at the second half of the video. But to start off, we do want to always look at Bitcoin. That is going to be the main market or the main asset that we're looking at in crypto to give us overall direction. It's kind of similar to if you're looking at the S&P, not really. I would say gold is a better comparison if you're looking at the overall metals sector, where silver doesn't really pump unless gold's doing well, and silver usually pumps later. For example, in the late 70s, we did have silver appreciate at a greater rate than gold, similar to how we're going to have Ethereum appreciate at a greater rate compared to Bitcoin. Both will be doing well, and both have been doing well, but somewhat of a comparison there. We also like to use the gold and silver ratio, similar to the Bitcoin Ethereum ratio, kind of a similar outlook on how we view that. So this potential head and shoulders does look like it is now invalidating, which is absolutely fantastic. People like Michael Berry, I think, Berry, B-U or B-E, Berry or Burry, but regardless, he was the person from the Big Short, the famous individual who shorted against the banks and won, and it was a really good movie if you haven't seen it. But he was calling for a massive head and shoulders, Bitcoin absolutely going into capitulation mode. No more bull run. We did not think so. We pretty much held our guns. It was looking a little bit worrying here. We did mention that having some limit orders wouldn't be a bad idea to buy the dip, but it's not like we were completely bearish. Like, I was not short or anything. I was just either going to be buying the dip or just waiting until this fizzles out, because it was tightly contracting and really just pushing deeper and deeper into the wedge. So yes, we could have melted down. That is a possibility, and that's why we were looking at possible situations. We were looking at actually adding to our position because we still value this as a part of this bull run. It was a pretty long, drawn out contraction and consolidation, but I do think it's over, and now the second part of this bull run is now commencing. So there is a little bit of a situation right at this level of resistance at around like 42, 41.5K, which we'll get into, but it does look like this head and shoulders is invalidating, where it needs to go above this right shoulder, which it already has, and now we're retesting for a new level of support. So it does look very solid. It looks very overall bullish, but obviously we could see this being a zone. Like, you could draw it a little bit higher up there, and then you could actually argue that that would be within that resistance zone. So we are still within that resistance band. I would say breaking 42K and clearing it, kind of getting into this level here, that would be total confirmation. I think we're now going to be continuing to move to the upside. We're going to be seeing pullbacks like we saw within our first push to the upside. We saw consolidations, we saw pullbacks, but those are opportunities in our eyes during this second stage or second phase of this bull run. So we're going to look at a smaller time frame, and then we'll look at the large time frame just to kind of get a better understanding of our overall call at the start of the year, saying BTC is going to be at 250K by the end of this year or higher. We'll see if that's even a possibility, and kind of look at what happened last time, what happened during this bull run, and seeing if we saw a second half similar to the first half, where we would be at there. So let's now zoom into a smaller time frame to see the pump that did come out of nowhere almost seemingly. Once we broke this zone right here, this little ascending zone, that was a really clear indication that we could potentially see a continuation. We saw this zone of confluence because this was a major zone of resistance that we were unable to pass. And then we basically pushed right up against it. Buyers were just unwilling to create a lower low. It was making higher lows and higher lows and higher lows. It was squeezing and contracting, and the volume had to go somewhere. And I'm sure a lot of people were short right around here. I'm almost guaranteeing you there is a tremendous, look how much sell volume there is compared to the buy volume there. Not a lot. I do think that after this big dump to the downside and it's just holding a level of resistance, people are going to be looking at shorting opportunities because the risk reward is so significant. And then this is the first phase of the stop losses taken out because a lot of people would have their stop losses above this zone of candles because this is the 4 hour. Looking at the 2 hour, look how long this consolidation was, where you're looking at this very tight key level, let's say around like just under 30K. So they might have had some short positions right there. It does look like a nice little squeeze there. And this is basically what their trade would look like, where they have a short position somewhere in there. Ideally, the higher the better if you're looking at shorting. And then you have your stop loss. And this candle right here took a tremendous amount of short sellers out of the market. And then this was even a further confirmation, because if you're still looking at shorting opportunities, if you're really bearish for some reason, that would be your second opportunity, because you saw a slightly more ascending level of support, which was right around here, and it actually broke to the downside, took a little bit of a spill, and that was, if you are looking at shorting, if you're not looking at larger time frames, that would be a situation where you could be looking to enter, and then you got blown out for a second time, and now we are clearly in a bullish trend, making higher highs and higher lows. So in my opinion, there is no distinction if it's an opportunity short. We are now in a second stage bull run that is going to overperform more than most people think, I think, because there's a lot of money on the sidelines. People are definitely expecting like 24K, even 10K. There's a lot of people publicly saying that BTC is going down who were long-term bulls, or at least thought that there was a lot of opportunities in blockchain or crypto. So a lot of shorts, or a lot of neutral people who don't have capital in the markets that will be having to inject their capital at a higher price. That will then obviously push the price overall higher, and then we're already seeing the kind of like the B word, I believe. Yeah, I think that the name is the B word. That talk where they're having very influential people who kind of hit the mass, basically, talk about crypto and the positive things that it's able to provide for economies around the globe. So definitely think that there is institutions and even companies having it in their treasuries coming in, and that's a completely different side of the world in terms of finance that crypto has really never seen, where you have companies actually saying the amount of money that we have is significant and we're losing it due to inflation. And companies like Apple and basically the largest companies in the world all have a huge stockpile of cash, and they are losing a significant amount of money every single year, or significant amount of value every single year, because the cash value is decreasing due to inflation. So if we see things like part of the treasury in terms of percentage getting transferred into BTC, that's a massive influx of capital coming in, which would push the price up higher. And companies, in my opinion, are willing to pay that because they're probably losing like, I don't know what the inflation rate is right now off the top of my head, but it's a significant amount compared to what it used to be. And if you are looking into the multi-million, billion category in terms of the cash pile, that's a significant amount of capital that you're losing every single year, or value. So in my opinion, does look really bullish. Going back into the price action here, we do see this major level of resistance at around 41K turn into a new level of support. Let's get our volume back in place. We see tremendous amount of volume compared to the sell volume, which is great to see. We saw a slight pullback here. We were contracting initially like so. We saw a slight pullback, a little bit of hesitation, but this, to me at least, indicates that there's a tremendous amount of buy pressure, because this in itself should be a slight deeper of a pullback, because it was trying, big move to the downside, came right back up, a lot of indication that buy pressure is coming into the market. You see the price try to continue. It is making lower highs and higher lows, so this is a symmetrical triangle. Broke to the downside. It is a fake out, and once it broke the apex, which would be right here, that is an indication that we are switching gears and moving back to the upside. It broke a major level of resistance that it couldn't break last time, which was this zone right around here, around 40K, let's say. And now we're testing it for a new level of support, holding really well on the 1 hour chart, and we do see a lot of buy pressure coming in. So it does look really strong, and something to look at compared to this is, in my opinion, a really good thing to look at is the BTC.D chart, especially in bull runs here. Gonna get a drink of water and then we'll continue on. So when we're looking at the Bitcoin dominance chart, we initially see Bitcoin initiate the crypto move up. Usually bull runs, but in this case we had a pretty significant pullback in a lot of the different alts that we were looking at or are invested in. So not a bear market territory pullback, but 50% is a significant pullback to definitely say the least. So, or more, right? So when we're looking at the next phase of the bull run, we did see a slight push in the Bitcoin dominance, where that was the initial squeeze. We pushed to the upside. That was similar to what we saw right here back in October and November, where Bitcoin initiated the bull run. We can see that here. Bitcoin took back a lot of its dominance. It's not like Ethereum and all the rest of the different alts are pulling back hard during this point, October to, let's say, December. They were moving to the upside. Some were consolidating, but a lot of coins were doing pretty well. The thing is, Bitcoin was doing relatively much better than the majority of alts, because the majority of alts need to basically get validated by Bitcoin that it's a bull run, that it's a speculative time, that there's money in the market coming in and pushing up prices so they're able to make a profit on whatever they purchased. And injection into Bitcoin is the first place that people are going to go in, because it is the most time tested, is the largest network. It has the largest market cap. It has the most liquidity. These are the things that big money look at. Mainly liquidity, mainly the ease of friction to actually get in and out of the market. All that stuff is pretty important. The market cap is directly correlated with the amount of liquidity that you're able to provide if it's a publicly traded market. So it does look like we are seeing the initiation from the whales coming into BTC. We'll look at the Bitcoin CoT data, which is basically data coming from the 4 largest buyers, the 4 largest whales in the market, and they did come in buying the market, and we can see the price action reflect the CoT data. And then ideally we're going to get even further contraction between the sellers reducing selling and the buyers increasing buying to decrease that delta, make it as small as it can, and that's what we're looking for in the Bitcoin CoT data, which we'll look at a little bit later. So at this point right now, we are, in my opinion, at the final high of this ascending wedge. Ideally what we're looking for at this point is we're starting to see a slight fade, and then once we break this series of higher lows that we're respecting oh so well, ideally we're going to get something similar to what we saw after the break of the 60 zone that we've been calling basically for all of like 2020. Not really looking at it at 2019, this zone, but 2020 was a big zone that we were looking at for 60 range. And once we broke that, it was a massive capitulation down, huge push to the downside for the Bitcoin dominance chart, meaning that altcoins are rallying and appreciating at a greater rate than Bitcoin. Bitcoin was still doing well, but after a certain point, altcoins are going to be rallying, and this, I think, is a good illustration of what we'll be potentially seeing for the final kind of blow off top for Bitcoin in the crypto market, where let's just see when Bitcoin started to pull back exactly. Kind of consolidating high was April 15th, and let's look at April 15th, May, April, and it's just right here. So we can see that Bitcoin topped around April 15th right here, but then the altcoins continued to rally until, let's say, one more month after the topping of Bitcoin. So I do think that we will see something similar with the final blow off top for Bitcoin, where we may see Bitcoin take back a lot of its dominance because it is that final blow off capitulation, or like the blow off top where you see the final parabolic move push the price up. You get a huge massive rally and you get a big dump that's basically going to retrace like 50% of the final parabolic move. And then from there, you're going to have a fall, and we're going to get into a bear market. No bull market lasts forever. So when we are looking at the Bitcoin dominance, I think that the Bitcoin dominance chart will still be going down even if Bitcoin has topped. So once the Bitcoin dominance chart reverses, that's when it's basically, for me at least, a further confirmation that yes, we are now entering a bear market where altcoins, it's no longer speculative season. It will be extremely speculative season until it's very not. And we can see that right here around May 20th. And I'm sure that was this major pullback right here, May 19th and May 20th. This just right here. And until that massive pullback, we're still seeing altcoins rally. Because we're seeing the price hold, let's say, around 47K, kind of within this zone of support right here, around May 15th. May 15th, right? Altcoins are still absolutely rallying. And it's basically the final zone to get out before we start getting into a major move to the downside. If it was a bear market, it would continue. This would push to the downside. It would be a totally different environment and scenario. And because we're in a bull market, that's why we were expecting a push to the upside. But when we're looking at it just from the Bitcoin dominance to the actual price of Bitcoin and the price action of Bitcoin, we do see altcoins are going to lag behind because, to put it bluntly, I think that smart money is in Bitcoin because it's a higher market cap, more liquid asset, whereas smaller altcoins that are going to be appreciating at a greater rate is more dumb money, it's more retail money, don't really know what they're doing, it's kind of like gambling. And they're going to be basically speculating more and more because they don't really know that it's the end of the bull run. They think that's going to continue to move up and continue to move up. And that's why we see the Bitcoin dominance push down to the last breath until it really doesn't. And once that shift occurs where it turns from a very speculative market into a slightly more fearful market in the end of this bull run, I think you'll know because Bitcoin will have made its massive parabolic move and the Bitcoin dominance will have shifted to a point where it's going into a very aggressive push down, kind of similar to what we saw right here. Very aggressive push down. We see a consolidation, and this is the final. Basically, it's over for altcoins. We should really look at either winding down our exposure, putting it into stable coins to either stake, put in liquidity pools, make some sort of revenue with the capital, or find other means outside of crypto or look for shorting opportunities. But I don't think longing altcoins is a good opportunity once you start to see the bottoming formation for the Bitcoin dominance chart. So that's what we're going to be looking for a final confirmation. It still looks like we are in the formation where we're going to be pushing down yet again pretty soon. And until we start to see Bitcoin go absolutely parabolic and we're not like slowly trekking up, making nice higher highs and higher lows, making formations along the way, that's a nice, healthy, trending market. Once you start to see an absolute parabolic push up where you're seeing green candles bigger than you've ever seen before on a large time frame, then it should be a little bit worrying. And until that point, we're going to be looking at basically injecting more capital into the market, using leverage here and there in order to capitalize on key points. I don't think it's suitable just yet, but we'll definitely take a look at altcoins and look at the opportunities that they're presenting to us. So taking a look at the Bitcoin CoT data, we do see it did make a squeeze. Now, the buyers did pull back quite aggressively after it did make this pretty bullish candle right here. Gonna go to a little drink of water here. But every week it does come out. So it would be good to be able to see ideally another push in the buyers and a pullback. This didn't actually hit 5, it hit 8 in terms of the delta. So the difference between the sellers and the buyers, not ideally ideal. We saw much smaller numbers in terms of delta in prior zones. Like this one was a 4.5. This is a really good opportunity right there. And it's just an indication of the difference between the sellers and the buyers. It does look like we are seeing a little bit of a wind down, but we'll see how it goes. Next week, there's a lot of buyers. That could be optimal. But look at that nice opportunity there. We already see a nice, very validating bullish daily candle right here where you see a big pullback, but it just only presents a wick. So this is indicating lots of buy pressure coming in, and this is an indication. This is a doji candle right here, and then you see the next candle really indicating that yes, we are going to push up. So you get an indecision, and then the decision is made where you see a massively bullish candle. It opened, it pulled back below this doji, below the previous daily candle, but it actually closed similar to the relation and went down. So the buyers were able to not only bring it back up to where it started, but the same level higher, but it also had to break this major level of resistance. So this is, for me at least, indicating lots of strength in the buyers, in the bulls, and now we're getting a nice pullback where we only have 1 hour left, and this is showing, again, immense buy pressure because you see, yes, it would be great to see an opportunity to see a continuation, like if we had something similar to this candle, but you see a validation because this is a tremendous amount of pressure needed in order to break this 40K zone. We saw the pressure come from this major candle because of the buyers, because of the overall speculative nature with USD going down with the US index. We saw the stocks move up, lots of optimism and hope in the market, and this candle to me is the start of the second phase of the bull run. And now this is a pullback validating this previous level of resistance as a new level of support. Lots of wick to the downside, This one was to the upside, validating this resistance zone, and we can see just how valid this was because we went up, came back down, we touched it again, and this was a break, getting a pullback because it's an exhaustive move after an impulsive push, and I think we will start to see a continuation here in the price of BTC, and that will lead and open the gateway for altcoins to then further push up. So that's looking really solid. The hash rate does look like it's finally crawling back after the Chinese mining exodus that they were doing. I don't know if they actually have kicked any other provinces or kicked any miners out of any other provinces, because I know it was multiple provinces that they were actioning for their exodus. I don't exactly know where they went. It would be pretty interesting to know from the miners that left China where they went, because that would be pretty interesting information in terms of the decentralization of the BTC network. That would be pretty cool to know. The BTC volatility, the BVol, is looking like we are holding a pretty strong level of support here. Obviously, with the Bitcoin volatility, I kind of view it as somewhat similar to the VIX, but the difference between the VIX for the S&P and the Bitcoin volatility chart for Bitcoin is that Bitcoin often sees the BVol chart push up when Bitcoin is pushing to the upside, which totally makes sense because Bitcoin's a very volatile asset compared to where you see VIX really only move up in major pushes to the downside, because the S&P usually crawls up, right? It's like staircasing up, which for Bitcoin is not a pretty sight because usually you get like pretty aggressive pushes to the downside when it starts to slowly staircase up, making barely higher highs and higher lows. But with the S&P, it's a different story. It's a different market, completely separate in terms of obviously the traders and investors, in my view, if you're looking at it from like a very characteristic set or view. But yeah, that's how I have the difference between views for using volatility. But it does look like we are increasing volatility, and when we're in a bull run, I do like to see increasing volatility coming out of a long-term consolidation, because from April to June, that was the pullback. That was the major pullback that we were looking at for Bitcoin, where the volatility increased. We pull back all the way to this zone here, kind of similar to what we saw last time in terms of the bull run here. 2017, we see like phases of the volatility increase. So you see, we don't have the data before this, but you see like this area of volatility, you start to see a level of volatility that Bitcoin gets to, and then you see the next level of volatility that Bitcoin gets to, and then you see the final level of volatility that Bitcoin gets to, and it's increasing the area, the kind of average zone of volatility each time. I guess that's how you look at it. So and this is the bull run all the way up until kind of February. That's when the BTC.D chart finally reversed. So when we're looking at BTC.D, when we're looking all the way back to February 20th, that's when the Bitcoin dominance chart reversed. So we can use volatility as well as the dominance of Bitcoin to have a good understanding of the overall kind of speculativeness of the market. So we saw a low amount of volatility right here. We're seeing an increasing amount of volatility right here in terms of the average volatility. And I think we're going to be seeing an increasing amount of volatility at a later point. I don't exactly know when, but we'll see some sort of structure at a later point, I'm sure, in terms of the average volatility of Bitcoin. And you see within this zone here, you see this kind of pretty large area of volatility within the consolidation zone. But when we're in a bullish push, usually it's a little bit more structured, and I think that we're in the low part of the volatility consolidation, so we have a lot of room to move up in the volatility, and we're already moving to the upside. And usually the volatility is going to be matching all the way through until we shift into a new trend. Like, we're not going to have it continue, like the volatility move up into a bull run, and then we're now in a massive bear run and the volatility continues. We usually have a shift. Like, for example, when we saw the bull run, this is a bull run right here, all the way up until early February, mid-February, when all the altcoins started to push to the downside, and it was basically a validation that the entire bull run is over. After that point, right, Bitcoin was still very volatile, but we were basically shifting the trend from bullish to bearish, and we saw the volatility shift. And I think that's exactly what we're going to be seeing right now. And from, let's say, October, November of 2020, from this consolidation of volatility at around November, that's when we started to see the new bull run. So from here, this is our first area of average volatility for Bitcoin. We're going to see another point of average volatility because we are still in the bull run until maybe, let's say, December, like January, somewhere around there. We're going to see another zone, and we might even see another zone because we saw the bull run continue after Bitcoin topped, and that's probably what we're going to be seeing for this upcoming bull run. So we'll see an average zone of volatility after the one we're currently in, and that's why I think that it's a pretty easy decision that we're going to go from where we are currently to a point where we're consolidating. And for Bitcoin to increase in volatility that significantly is still a significant push further that we have for the price of Bitcoin to move to the upside. So we're still in this average level of volatility. I think we're eventually going to get out of it, like if we're going to be pulling back a little bit, and then we're going to be pushing up into a new level of volatility. We'll continue on into that new higher average level of volatility, and then we'll get to a point where we're seeing max peak volatility, where you're going to see that parabolic push to the upside, and that's the point. That's the first indication that you should be like, oh, this is massively optimistic. And it should be a little bit worrying when people are making shitloads of money with stuff like Safe Moon, Come Rocket, like Elongate, all these different tokens that are very speculative, very small market cap, that are very volatile, and they're just absolutely mooning. That, you know, you could be looking at that and saying, this is a significant amount of money. Maybe we could look at taking some profit. And the first indication is Bitcoin absolutely parabolically moving and mooning to the upside. Second one, in my opinion, is when the Bitcoin dominance starts to shift, along with the Bitcoin volatility shifting as well. Once that hits, I think that's going to be the indication that we should be starting to get out of altcoins, out of really most of crypto for longs, and starting to look at methods to generate income using staking, using DeFi, whatever means that you are able to, basically, or get it out and then use it for other things in the world. All right, had to get a little bit of water there. So definitely keeping an eye on Bitcoin. Does look really solid. It's even taken a move up from where it started at the beginning of the day here. Not going to be taking that phone call. All right, and then we're going to be moving on to the S&P. So let's take a look at that right here. So we're going to be taking a look at the S&P, and then we're also going to be taking a look at the VIX, but we saw a big recovery from the fall that we had. This was very similar to what we were looking at right here, where we had an expansion in the volatility. It did expand a little bit aggressive compared to what we saw, or what we were expecting at least, but it did recover within this zone right here because we had this zone, which is 1, 2, 3, and then it turned into a key level of support in confluence with the splitter, which is this guy right here. And if we take a zoom back, this is just expanding in volatility. It looks a little bit worrying because ideally you like to see contractions, but the S&P is a different beast, it looks like, and it's just continuing to hold this splitter since around March of 2021, and it's just been forming a series of higher highs and higher lows, which does look pretty solid, and I don't think we're really able to make, we're able to make some level of a resistance right here, it does look like. So we are contracting slightly again, holding this level of resistance, but this major level of resistance is the kind of funnel or megaphone resistance, and then the megaphone support is going to be this guy right here, and then the splitter is what we're talking about that the price is currently holding. Now if we're taking a zoom back, a look back at a larger time frame, and if we take it all off, we can see that there was a massive, let's get our snip right here, there was a massive expansion, and a lot of people were calling for a lower low, but we never got one. This expansion right here, and then this is the splitter right there. And then once we started to break up, we were looking at this a lot more bullish, and then we've been really just seeing a strong bullish push ever since. And looking at it from a smaller time frame, we can see that we've been just really squeezing up, and then we saw this nice level of support right here hold. You see the resistance turn into a new level of support. So it looks like it's holding really well. And then how we got our key level for our target was looking at, let's just take that off, looking at this zone right here, the peak and the widest the megaphone goes, and just projecting that using geometry to look at a potential target, because that's the max zone or the max width or the largest push. So when you do get a breakout, you're going to be looking for that largest push to be similar in relative to the size of the actual structure. So you're just basically using simple geometry, using relative size to determine where your targets are. And you can backtest that to determine if they are going to be potential zones or prices are going to be reacting. And I've personally done it, and I view that to be a true case. So we do see 1, 2, 3. That's a valid trend line right there, and we are squeezing up. It does look like we are just holding just above this key level of resistance right. Oop, let's just redo that again. Not click that right. There we go. And then let's make that a little bit more visible with the opacity. There we go. So we can see we're just holding below this minor level of resistance and this horizontal level of support. But the major zone that we still think that we're going to be hitting is 4,800 around for the S&P. So I think that we are going to be looking at this to break to the upside. Let's get our little brush here. Push, break to the upside, and then we might use that as a level of resistance, squeeze, and then continue to move to the upside. But I think that this resistance right here will be coming into play while we are pushing to the upside. So we do have a nice level of support right here. That's great to see. And then we see the price pick up very aggressively, pick up very aggressively, pick up very aggressively. All these times, you know that buyers are present. It's just really, really bullish when you see the price pick up right after a dip. Just basically V recoveries every single time. So it wasn't too surprising to see a V recovery right here. And then you're seeing the price break this previous resistance, form a new level of support on top of the previous level of resistance, contracting and consolidating. And it would be great to see something like this where you're seeing a tightening of contraction, and then you're seeing a break up, resistance, support, and then a further continuation of the overall trend. So that's still my overall outlook on it. I don't really see, unless the central banks are going to be coming out and saying that they need to raise rates and they need to tighten monetary policy, and they are worried about inflation and they're going to be basically raising rates is the main thing that they can do. Then that would be a little bit worrying, because if they are going to be increasing the interest rates, that would be a really bad thing for the overall market. And I don't think they are, because they don't really have an option, because there's so many zombie companies and they need to really do everything they can to keep this entire charade of an economy to some degree where they're able to print money out of thin air afloat, because if they can't, then obviously the US dollar is just going to absolutely proliferate into nothing, because then no one actually values it. But they need to really keep a firm grasp that they think that they have everything under control, because if word gets out that they don't, then all hell breaks loose. So we are still contracting here. Kind of similar to the previous major contractions. We're just looking for major contractions in the volatility. If we're just seeing a nice like basing form, it's not really something to look at. But if you start to see the series of lower highs break, that's when we should be looking a little bit at the S&P to see if there's a formation that it's breaking to the downside. If we're looking at potential bearish formations that could be arising, maybe not even looking at the S&P, but like the Nasdaq or the Russell 2000 or whatever index that you're looking at to kind of get a broader view of the market, maybe whatever, depending on the market that you're trading, but we just look at the global macro aspects. So I like to look at different indexes, but it does look like we are still contracting for the S&P, so there's not a whole lot of information as long as it's still nicely contracting, like if we're going to get our bars pattern, and if we do something similar to this, that would be ideal, because then we just see a further continuation of the S&P. Crypto would be doing well, and then at a later point we might see a huge shift in trend where we're going to be seeing the S&P fall. Ideally, it would be really great to see the S&P do well, the volatility contract all the way until the end of the crypto market, and then everything is synchronized, so they all risk on assets all fall down at once, and then the USD all goes up at once, similar to how we saw the COVID crisis, where things like even like gold, silver, palladium, like all commodities, oil obviously went negative in some cases, for like crude oil, which is crazy. We did not see Brent actually go to negative, and then you saw like the S&P, all indexes, basically all stocks really, except for the select few, all of crypto do very poorly, and the things that did well were basically just US dollars, Japanese yen, stuff like that, really, like not very risk on assets, to say the least. So we're going to be looking at different really set of assets. Not really going to dive into the Dow Jones, nothing super interesting. NASDAQ, nothing super interesting. Looking a little bit into the commodities, we do see oil. We just look at the large time frame, the weekly chart, have a really strong recovery for the buyers. So kind of similar to the S&P, we see recoveries left, right, and center. You know, we see a nice structure right there, break to the upside, and then you see nice continuation patterns, and then you see a pretty significant dump down. But on a large time frame, this is a major level of support, which is a previous level of resistance that it kind of pushed through without any troubles. And this is that zone of confluence right there, where you see a key level of resistance, and then you see this structured level of resistance for the descending zone. So you kind of have something like this is your key level of resistance, which is your confluence zone, and that's where you see a lot of contraction ideally, and we exactly saw that for crude oil, which is this structure right here. And then now we're pulling back, validating this previous level of resistance, like so, and you're going to be now, in my opinion, looking for some sort of structure and then continuing to push to the upside. So crude oil does look really bullish. This is just a continuational pattern after it has broken this major level of resistance. So after an impulsive push breaking such a major zone of significance, it's very common to see the price pull back, validate the zone, because that's an exhaustive phase after the impulsive push that is needed to break a major level, either a floor or a ceiling. It takes a lot of power and energy to push through that zone. So you're going to have to basically wind up again for that next strong push. You know, you can't have buy pressure. You can, but in a structured market, you're going to have pullbacks as market breaths, as the buyers loading up again, pulling back and basically reloading their ammo, or like reloading their gas before the next push. And that's exactly what we saw right here. Silver, we do have to readjust that a little bit. Gold is slowly just trekking up from that big spill that we had to validate that previous level of resistance. Does look like we are able to hold that higher low. So this is going to be, for me, the left shoulder, and then we see the head right here, and this is going to be the right shoulder. So then the next potential level of target, let's just make this a little bit bigger. The next potential level of target for gold, let's get our arrow. And then same thing, using geometry, we like to look for targets. So the next level for gold to be at is going to be around 2144, 45, somewhere around there. And then you are probably going to be continuing to push to the upside, because if we're looking, at a larger time frame, we can see that we've just broken out of, I believe, like a 7-8 year consolidation. So this is a very healthy bottoming, but man, it was very long. And on a large time frame, we see similar to Bitcoin, gold just continues to rally up because it is based in US dollars. If you have gold based in silver, it's not going to have massive pushes to the upside, because you're going to be basically trading in a zone. But if you are comparing an asset to something that is devaluing and will continue to devalue over time, you're going to have something like this, where you're going to have a continuation of the chart going higher and higher and higher and higher, because you can't really have the price of Bitcoin. Well, you can have it going down, but like Bitcoin, there's only a certain amount of them, and with the dollar, there is unlimited amount of them. And I think that's something that is very easily understandable if you look at it from like a very simple perspective like that. So head and shoulders, reverse head and shoulders, it does look really strong. Neckline's going to be around like the $1,900 zone, which was a previous all-time high. Pretty interesting to see that come through and how well respected that is. Silver, I think, is going to be asset that I'm going to be patient for until we break this major level of resistance around $28.50, $29. We can just readjust that a little bit, and we can see this is a major zone. This is on the daily chart. This is a candle closure and a candle opening, and then we can draw low, higher, low, higher, low, higher, low, and then draw that a little bit like so. Or if you're looking from the 2-day, maybe the weekly, there's a nice little wick there, like so. And then we're going to be drawing a nice little zone instead of one little price chart, or price line, I should say. So that's going to be the ascending zone for silver. You can see that there is actually a contraction going on here, which is actually really nice to see. So let's get our resistance in there as well. And I think once it starts to break out, the initial target is going to be, let's get this zone here, is going to be around, let's say, $36, but we can see silver, when it does rally, just goes absolutely parabolic, like we can see right here. And I think right now this is like an inflation trade where the decade and a little bit of money manipulation, basically, from the central banks is catching up to them, and we are going to be seeing basically all metals ride. We're already starting to see most of commodities increase, not just because of supply shortages, but because we are printing so much currency. So this is going to be not just a crypto bull market, but I do think that we are going to be seeing a longer drawn out bull market for the commodities, because of the fact that we're printing so much money, which could possibly extend the crypto market. We have no idea. But that's why we like to look at not just the price of Bitcoin, but we also like to look at dominance. We like to look at the total 2. We like to look at the CoT data. We like to look at a lot of different tools in order for us to analyze the market a little bit better. So on the weekly chart of the gold and silver ratio, this is similar to the Bitcoin Ethereum ratio. If the Bitcoin Ethereum ratio is going down, we're probably in a pretty big bull market. And if gold and silver ratio is going down, similar to what we saw in 2010 to 2011, we're going to be seeing something very similar where we're in a bull market. So it does look like we're in a nice continuation formation right here. Obviously not going to trade this, but it does look like we have hit our third high. And if we start to pull back down a little bit right here, and once we start to break this higher low, I think it'd be looking really phenomenal for silver to, again, take another push to the upside there. Silver is very well respecting of symmetrical triangles, like we have seen throughout this whole push right here. We traded silver during that time, and we did very well. So very, very structured formations that silver creates, in our eyes at least. So we'll just keep it at the chart of the S&P. Quick touch on the US dollar. This is the US dollar index. Basically, it's not the actual representation of the US dollar's strength or weakness, but all it is a representation of the US dollar compared to, I believe it's over 50, just over 50% of euro and a bunch of different other currencies, Swiss franc, Japanese yen, I believe odd New Zealand's in there, and a bunch of different major currencies and even minor currencies, but it is a representation of the US dollar versus the other currencies in the FX markets. And it's a pretty good representation because if there's massive fear and uncertainty in the markets, capital will be flowing into the US dollar. And it was very present during the initial crypto, or not the crypto, the COVID crash, where the US dollar absolutely spiked and basically everything else went down. And as of right now, we are seeing weakness in the dollar, which is fantastic. This is setting up the crypto market for another push to the upside. We are seeing lower highs, which is also great. I do not want a double bottom. That was a little bit of a worry when we were squeezing up here, but this ascending wedge pushed the price down similar to the ascending wedge that we had on Bitcoin, and now we're pulling and now shifting trend to push back down. We're probably going to be hitting this 91.35 range. Ideally, we'd like to see it come all the way back down to the 89-ish range, and that would probably take quite a while. Like the ideal situation for us. Let's take a look at our, oops, not that one. It's this guy right here, bars pattern. Kind of the final push, and then if we're going to be seeing something similar to this, that would be great, and then that would bring us into all the way into September, and then we might have a little consolidation, and then it would line up really well if we actually inevitably break out of this. I don't mind, because it might be even like in February, so like if we're, obviously, this isn't exactly what's going to happen, but if we're just speculating on scenarios that could be a possibility, that would be something I wouldn't mind, right around there. And then a little bit of a pop in November if we get like one final pullback, and then during this phase, everything's pumping, and then you get a pullback, and then once this starts to rally to the upside, like so, that's going to be basically February of 2022. I don't mind if the crypto market's pulling back, because by that point, there should be indications in the markets using the tools that we are using in order to understand that things are topping, there's too much euphoria in the market, and it makes sense to reduce the exposure in speculative assets. So, now we're going to be looking at a bunch of different altcoins. I do think that Ethereum is going to be basically on a rocket ship from now until a little bit longer. Not absolutely going straight up every single time. Like we do see pullbacks along the way, but you know, like I would say that is basically on a rocket ship. If you don't think that's on a rocket ship, you have a little bit of delusion in terms of what you're expecting out of the market. But this is a great opportunity to look for basically if you're looking for short-term trades, continuation patterns, or if you're a longer term swing trader or investor, good opportunities to buy all along here. We were talking about it. Even now, just breaking that $2,400 level of resistance is a major level of confluence. And for those that do not know like what a zone of confluence is, let's just quickly make this right here. A lot of people think it's just a descending zone, but we view zones of confluence, let's make this a little bit bigger, as two zones intersecting at once. Like, yes, this is a zone of confluence, and you're looking at this minor zone. Yes, you could classify that as a zone of confluence right there, but we view it outside of this descending zone, and we also draw a line at major zones. We look at like large time frames, 12-hour, daily, weekly, 8-hour, 6-hour. We don't look at 15-minute chart to view what a major zone is, right? So then when we're looking at this zone, yes, this is a major zone where we see 1, 2, and then the blow off top, resistance turning into support, turning back into resistance before the final bottoming right there. But it does finally look like we have broken this zone of resistance right here. And then this key level where you see, yes, there's some trading above this zone, but if you're looking at a time frame, it got smacked right back down, and it got smacked right back down. You're going to see resistance there. And this zone, you see initial hold, and then you see a dump below, and then you see a hold again. So this is a reverse head and shoulders that did not actually break out right here, but this major level right here and this major level right here, because this is the shoulder and this is the neckline. So we'll project that out at around 29 to 3K for Ethereum for the next level. And then you see, let's get this zone right here, and then you see this zone right here, hold, and then break, and it comes back up, retests, and then comes back down. So this is an extremely key zone around 2400, and then we're going to be looking at that zone as the final definitive line to say if it breaks this, we are now shifting our view to consolidation, contraction, to breakout. And that's what we've done right now, where we see a break, we see a nice squeeze, you see resistance on a smaller time frame, creating our nice structure, and then you see a break once it breaks this level of resistance. But this zone right here is going to be our zone of confluence. It's not just this zone right here, but we look for major zones within large time frames, and this whole pizza slice looking thing right here, this little pizza slice looking thing, is going to be our major zone of confluence. Once it gets out of the pizza slice, there's a certain point that we have, if things are hitting the checklist, we have to have a certain point where we have to have the confidence to say it is moving to the upside. And we are out of the pizza slice, we are out of the zone of confluence, and I think we're going to be continuing up for Ethereum. And how we view our first level, the minimum level of target, basically, is going to be somewhere, let's say, I don't exactly know, obviously you'd use an actual line, somewhere around there. $3,300, somewhere around there, and then from there you could be looking for nice zones of contraction, because you could overperform, contract, and then push to the upside. We know exactly. You have to wait for the actual price action to see how it gets there and stuff. But that's going to be how we're going to be viewing Ethereum. Hopefully you load it up within this zone right here. Ideally, still a good opportunity. This is like the highest confidence trade, where this is obviously you're getting a better ROI, but you have the possible situation where you're actually going to be melting down, and that's not a good situation to be looking for longs, obviously, but you don't know that beforehand. So I would say that this is the point where feeler trades could be an opportunity, but we were expecting it to move up because we're in a bull run. So that's Ethereum. That's obviously a major altcoins that we do have to look at, because that is going to give way to a lot of smaller altcoins, because Ethereum is kind of like the big brother to a lot of different assets, in my view at least, in terms of like platform projects and all that. Sol doing really well. Wow. Up at $36. So let's take it to the 2-day chart. We see on a smaller time frame, very well respected. Something that you don't see on a lot of different altcoins is, for example, Ethereum made a low, a lower low. Didn't make a lower low here, which is good, but it did make that lower low. For example, this is a better one. Polkadot made a low, a lower low, and then a lower low. So you made a series of lower lows. So relatively, that is not as strong as something like Solana, where it made a low, where basically every altcoin dumped aggressively, but it made a higher low, and then it made a higher low. So you see buyers come in, and you see tons of buy pressure coming into the market, buying these dips. So in my view, like more buy pressure than sell pressure on the way down. Like look how much sell pressure, look how much movement there was on the way down, not much sell pressure. That initial bottom where buyers were buying that higher low, there was a significant amount of buy pressure, and now you're getting that explosive push. And then the zone of confluence for us within the area of Solana, the pizza slice basically, is going to be basically this zone right here, minus within that zone there. So once it breaks around 36, that's going to be the final confirmation that I think Solana is going to be absolutely rocketing and continuing to push to the upside, like we have been seeing for this asset. There's been a lot more talk about Solana, which is great. I think it's definitely something that is a great actual project that's like an investable project. Unlike, for example, like Doge, where it's just more of like a meme coin. I wouldn't really want to hold Doge for a very long period of time, just my personal opinion, just because I value progress and utility and usability instead of a joke. Hopefully other people do as well. And now let's look at the DeFi projects of the world that there's just 4. Obviously, there's a lot more, but these are probably like one of the largest. Uni's the largest, I believe. Aave might be second. Comp's getting bigger, and Sushi is kind of like Uni to some degree. Similar vibe. Comp's really interesting of a project. Aave is interesting as well. Mark Cuban's in it and very focused in DeFi, particularly Aave, which is interesting. But overall, it does look like we are seeing a final kind of completion of a lot of our structures. For example, Sushi is pulling back for the wind up to break the $9.50 range for this double bottom formation. Look how perfect of a structure it is, right? You see a nice pullback to validate in 9.5. You see the double bottom hold against this major level of resistance. It was a previous resistance all the way back in September 2020. Once it breaks 9.5, great opportunity, fantastic opportunity. For Aave, I would say the major zone of confluence would be at like that 325 range. So we do have a reverse head and shoulders with a descending neckline, which isn't fantastic. I do really like to see horizontal levels for necklines for reverse head and shoulders and head and shoulders. But this does look like it is pretty well respected. It is contracting. What's actually interesting is I actually like to see, more ascending necklines, because that is giving me an indication that it's able to break this previous level of resistance. Now, you can see it does actually hold it. Like, let's say you're going and looking at this from a weekly. Now this head and shoulders is a lot more respected because you see the wick break to the upside, but you don't actually see the candle closure break that neckline. So Comp's potential, you could call it a feeler trade entry, would be the break of 450. But I know it does seem pretty high up, but I think 540 is going to be the highest confirmation trade after this major zone is broken. But the feeler trade entry would be around like break of the 450 zone for Comp in my view. And then looking at Uni, already broke our first indication, and our major zone of significance that we do need to see break for the highest level of confirmation for for Uni, Uniswap is going to be 2260-ish, around there. Let's just open that up really quickly. We can see, picked a major level of resistance and horizontal zone right here, zone of sensitivity, massive dump, held it until it didn't, and then it took an absolute puke down, pulled back, came all the way back down, could not push further down. The fact that it did not make a lower low, actually we can see that Uni was able to hold that previous low to the T. I think it even made a higher low. I believe it made a higher low. I think it did, which is fantastic. So Uni also is relatively stronger than a lot of the different alts because it made higher lows during the dip, which is fantastic. So it does look like that 2260 range is looking like it's breaking soon. So it does look like the overall DeFi projects that I'm currently looking at is looking great. Things like Aave and Uni have done really well because they've been able to, well, actually mainly just Uni because they've been able to hold higher lows, whereas Aave not really. Basically Uni's the main one. Aave looks pretty decent, Comp looks pretty decent, and Sushi looks like it's potentially breaking pretty soon with a lot of tightness and contraction within that higher low, which is great to see. Doge is just consolidating, but it is, in my opinion, looking pretty solid. We saw this major wedge break to the upside. My target for Doge is actually going to be 76 cents again. We've basically hit 75 cents or 72 cents. Pretty close to it, and we've broken our first major zone. I'd really like to see the 23 cents, so that's our major zone right around here. So if we take this one out, and if we take, let's say, this one out, our first major zone of support was around 16 cents. That has been holding for quite a while, and then our major zone that we do need to see break does look like it's kind of slowly squeezing up towards that zone where you're seeing like an initial push, came right back down, we'll make it another push, came right back down, and then you make it a push to break it, and then you get the nice pump. Obviously Doge like absolutely moons when it does, so we're probably not going to see a nice consolidation push to the upside. We're just going to be basically seeing a moon after a certain point. And I think the safest point where you're still able to get a really good RR is going to be around 25 cents, because 25 cents to 75, really good opportunity, and then your stop loss would be just below here. So you're able to get a pretty damn good 6 RR if you're able to get a pullback entry at around 24, 25 cents with a take profit at the basically previous high of 75 cents, and then your stop loss does sound pretty significant, 35%, but you're able to get an RR of 6 risk reward, which is a really, really solid RR. Will probably take some time, but pretty good option there for you. So that's going to be the overall look on a lot of the different projects. The last one we'll touch on is Quant. I've been definitely putting a good amount of money in this little by little, kind of started back in like this zone right here, where it was like $75, $76. Was able to get an entry at $60 right there. That was the main entry. Like I would just put like a tiny, or sorry, right around here, $76. Was around there back in like July. An individual, I believe, named Miguel on our Discord initially talked about it and did a little digging. Was pretty interesting. And my dip buy was at 60, so right there, which was a phenomenal actually limit order. That was a really good one, and then we were able to get a push up, and we are now pressing up against this major ascending zone. It's been really structured on the way up, but the final thing we'll look at is going to be the relative strength for the alts, and we've seen QNT basically dominate the relative strength chart or tool for a while now, and that is indicating to me that throughout the consolidation, Quant has been going up. Not a lot of alts can say that. Most alts have been barely able to make higher lows, let alone higher highs, but Quant has been trekking up. So I'm viewing that as a very relatively strong asset compared to the rest of the crypto market, especially the alts, and that's kind of why I'm looking at Quant as an opportunity to look for longs. It looks like a really good chart, really well structured, pretty new. Actually don't know when it started to trade on any market because this is just going to be Bittrex. I know it's on Coinbase now. That's why I purchased mine at least initially. But overall, it's now pressing up against this zone. It's creating higher lows, as you can see on a smaller time frame. Let's say the 2 hour. It's creating these nice higher lows. Took a little bit of a pump up because there was a slight squeeze right here that pushed up, pulling back a little bit, but it does look like we are initiating into the expansionary phase of breaking this level of resistance. Because from this zone, because this was a nice squeeze right here, right there, and then it was squeezing, kind of a massive volatility event that just held the support. If you're looking, I guess, from like a larger time frame, because you see this nice ascending support, squeezing, and then it broke out, and then it retested this major level of resistance, and then it's now starting to push up against this zone, and now it's squeezing. So you see these expansionary and contractionary phases in really any market, right? So this is a contractionary phase where you see price came back up above this zone, so it's contracting, and then it expanded. And then this is another contractionary phase where it contracted, where it came up, down, right, on a large time frame. On a smaller time frame, you can see that there's some contraction there, and then it went into an expansionary phase. So this is a contractionary phase, went to an expansionary, and now you are in an expansionary phase, pressing up against this zone. So you're like going like this. That to me is looking very bullish, because if you see the price, let's say if you're like looking on a larger time frame, see the price going up, and then up against this level of resistance that we've been pressing so hard against at a certain point, especially in the overall market. That is really bullish that we're going to be breaking it. And once it breaks it, we've broken the normal structure. So we're going to be creating a new, more ascending structure, because with the overall bullish thesis, things are going to be increasing volatility to the upside. That's what a parabolic move is, and that's what a lot of altcoins are going to be doing in this bull run. So breaking it into a smaller time frame, you can see contraction right here, right? We've already drawn that chart. Another contraction right here, right there, and then you're seeing another contraction right here. And I think the next expansionary phase is going to be to the upside. So you don't want to be at the end of a contraction. You want to be at the start of an expansion. That's the obvious ideal goal for any trader. So that's going to be the end of looking at all of our altcoins, and then we're going to end off looking at the relative strength. So this is looking at the 12-hour time frame. We can look at the daily if we really want to. If we're taking a really long-term look back all the way, let's say at the start of 2021, this is like January 7th, all the way till now, we see Matic actually doing the best. From January till now, Matic's still up 300%. Cake is up, 3,000%. My bad. Cake is up 2,428%. Yeah, that makes sense. Just making sure I'm reading the numbers right. And this is against BTC now, just to make sure. That makes sense why this is so much more bullish. Let's see if there is a difference. So compare QNT BTC. Hopefully this one's long. Okay, cool. That's why it was all the way down here. So we can see Matic, Cake, Sol, QNT, which is Quant, the one we were talking about, which is just up here. And then we see BNB just below here. And going to, let's say, like May of this year. When was the pullback? Let's just make sure we know exactly when the pullback was. It was around May 18th exactly. So let's zoom into May 18th, May 19th. Let's go one more up, May 25th. So this is basically the start of the consolidation, right? We can see the rest of the altcoins, and then there's QNT way up here, just absolutely dominating. So this is, and then ICP, probably one of the worst. XLM not doing too hot, DOT not doing too hot. Solana's doing really well, BNB's doing really well, Comp's doing pretty well, Cake's doing pretty well, Aave, Theta, Uni, those are doing pretty relatively well, but we can see QNT is just on a completely different level. And then when we zoom into, let's say, the more recent time frame, but this is like the major zone that we want to be looking at, because this is the consolidation phase of, or you could say the accumulation phase of BTC after the major meltdown, after the strong push to the downside. So if we're taking a look at a more smaller time frame, let's say up until the start of July, basically just a 1 month shot, we can see yet again QNT absolutely dominating. Aave is doing pretty well, and then we can see similar tokens are staying on top. So things that might not be the best investment would be like ICP, probably not the best, and just in terms of relative strength. I know very little about it, so I have no idea the possibilities or capabilities that it has. But when we're looking from a relative strength, relative weakness technical level, things like QNT jumps out at me. Aave, Cake, Link, Uni, Comp, BNB. Those are the things I'm investing in. And that kind of starts my search almost. Where we're looking at, I just plug random altcoins in. If they do really well and if they are relatively strong compared to the rest of the market, then I'll do some digging. So that's going to be one of the ways I filter to look for different opportunities to invest in or trade in, because these are going to be the things that have a lot of momentum. Both on the way up and on the way down, obviously, but relatively, we like to see things that are strong. So hopefully that was a little bit of insight. You can make this on your own in TradingView. So if you have those capabilities, I would say definitely do it. It's a really good tool that I have been able to utilize, and hopefully you are able to as well. So thank you very much for tuning in. If you thought this was educational, informative, this was quite long, I guess over an hour. Definitely went on a little few tangents, but hopefully, I don't know, I've been making like shorter to the point ones, and they haven't been like super traction. They have been gaining a significant amount of traction, I guess would be the best way to put it. But if you thought that these a little bit more rambly, but more, I guess you could say personable, might be a good way to put it. More like touching on a lot of different things would be a better way to structure the videos, then please let us know, and we're happy to do that. So thank you very much for tuning in. If you thought this was useful, educational, entertaining, informative, please give it a thumbs up, or I guess what a lot of YouTubers say, smash the thumbs up button, and please subscribe so we know to continue to make more videos like this. So thank you again for tuning in. Hopefully you all have a wonderful weekend, and until then, have a good one, traders.